Now let's take a look at the Doji and the long leg Doji simple candlestick patterns. A Doji looks similar to a plus sign and is formed when the opening price is the same as the closing price. This basically means the candlestick has no body or actual stick and is made of almost entirely of the wick. Similar to a spinning top, Doji show that there is indecisiveness in the market. The bulls and the bears pretty much struggle all day for nothing. The length of the wicks can vary, but the body of the candle will appear as a short, straight horizontal line. This represents indecisiveness, where the bears and the bulls were virtually even. During an uptrend or a downtrend, a Doji candlestick shows a trend reversal may be starting. If the trend reverses after a Doji appears, the price level of the Doji will now become a support or resistance level. The long leg Doji is simply a Doji with very long upper and lower wicks. The candle body itself will appear as a horizontal line like a regular Doji. This shows that there were strong yet balanced opposing forces on both the bullish and the bearish side. A wide range of trading occurred during the day, but it all ended up back at the starting point. The wide trading range shows that there was much more volatility that occurred during the day than with the standard Doji. In order to form a Doji, the opening and the closing price don't have to be exactly the same, but will be very close to one another. Both Dojis and long leg Dojis show indecisiveness in that buyers and sellers held equal control, but Dojis also serve as a great trend reversal signal. If a Doji occurs during an uptrend, for example, this signals a likely trend reversal. Bulls held control as the trend continued upward, but then a Doji occurs signaling indecisiveness and a possible change of control. So now let's take a look at an example of a Doji pattern on our candlestick chart. As you can see here, this stock was in a massive decline. It seemed like there was no end in sight, but then a Doji pattern formed down here. This indicated that the bulls and the bears were starting to battle for control. After a battle for a few days, the trend reversal was confirmed and the bulls drove the price higher. Remember to always wait on confirmations before trading any reversal signals. Now let's take a look at an example of a long leg Doji on our candlestick chart. You can see that the stock here was in a slight uptrend, but then a long leg Doji formed up here at the top resistance level. This indicated that the bears may be starting to gain control of the stock. The following days showed the stock stay below the resistance level and below our Doji, confirming the reversal. There are actually multiple types of Dojis you may come across when trading. In the next lecture, we'll be going over the gravestone Doji and the dragonfly Doji. I'll see you in the next video.